Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 2nd of November. And it's been a good start for the FTSE so far in November, although obviously only two sessions. Here you can see that we bounced basically off what was the post-March 72 to 7300 support zone for this market. And now we're just toying with the previous resistance on the way down, 74.30. End of day close above that gives us the 50-day line around 75.10. And then the best case by the end of the month up to 7,700 at the top of that falling trend channel from back in February. This stage, only an end of day close back below 7,300 suggests that the idea of a rebound from current levels will not have legs. Moving along to the DAX, which has been in the wars over the course of the early autumn at least. Here you can see, though, we managed to have a bear trap island reversal, so almost one of the most negative setups that we had going into today, with followed by the gap higher, which makes this a very strong setup indeed. Above 15,000, looking for the market to retest the mid-October resistance around 15,500 over the next week or two. But the bullish divergence there with the lower low there for the late October period, but the RSI remaining the same, was a sign of a potential turnaround, but one wouldn't have expected a gap to end that recent bear move, so very strong price action there. Moving on to the Dow, and here you can see the bear trap was the clue. That actually came in yesterday to start the week, and we also had bullish divergence of the lower lows for the end of October, but RSI actually up on the last dip. We're looking for a return to the mid-October resistance around 34,000. That's also just above the 50 and 200-day moving averages. We'd like to see this market stay above the initial October support at 32,800. That's the stop loss area for now. Moving on to Bitcoin, which is certainly the star of the show and has been for at least a couple of weeks. Here we've got this market breaking out of a mid-move. It looks like a bull flag mid-move triangle there. The floor of the triangle currently around 34,000. Above 34,000, we're looking for not only progress through the 35,000 area, but actually up to as high as 43,000 by the end of this month. Be rather pleased with myself if we get 43,000 in the course of November. We've already had the golden cross that started off last week, and the progress, I think, as well as can be expected, given that we are obviously rather overbought in the RSI window at the moment. Moving on to the stocks, and better selection than of recent days, I think. The market improving a bit. Here we've got Armadale Capital, had a little consolidation above the, or at the 50-day moving average around 0.76. Above that, looking for up to 1.1 pence by the end of this month, and the way things are going, which will be by the end of this week. Next stock is one which had announced that it has achieved 1 billion impressions, whatever that means, we don't know, but it sounds very technical and very flash. In terms of the charting, you can see that we've been in this falling trend channel that's been in place since the summer, and if I just adjust that line there, you can see that the top of that falling trend channel is £1.73, so that's the initial target at the moment. We've gapped off the low, so that is potentially a bear trap gap reversal, and if we can get through 173, the next target up would be up to £2.60, which, if 1 billion impressions is important, could very much be on the cards. I'd like to see the shares stay on the right side of £1.40 in the meantime, but that unfull gap to the upside as yet. Very positive on Audioboom. Moving on to one of the stars of earlier in the week, which is and was Cadence. Here you can see that the shares are having another go in terms of the upside, bouncing from just below the 50-day moving average around 6.6 pence. Above that, we're still looking for 12 pence as soon as the end of this month. Obviously, if you're cautious, you wait for a clearance of the post-summer 8 pence resistance area before taking a view. Another retail investor favorite is Corcel, and here you can see that the shares shaping up for a move to the upside. We've broken that line of resistance from September around 0.44. Above that, obviously a retest of the 0.5 pence area on the cards, but best case would be up to 0.6 pence by the end of this month. Previous rally that we saw last month in Capital Metals looks like it's could be reviving. Unfull gap to the upside ahead of the news that we had from Sri Lanka, but then now we've bounced off the rising 200-day moving average, about both the 50 and 200-day lines rising, so rising 200-day line, and looking for a retest of 5.5p by the end of this month, while we remain above 2.5p on Capital Metals. Moving along to Cizzle, and here see the shares reviving themselves after a period in the wilderness. What you can see here is that we've got a rebound off the floor of this broadening triangle from back in May. Floor there around 1.7p. Above that, we're looking for a move back towards the September-October resistance at 2.6p, perhaps as soon as the end of this month. It's a rather punchy call, but if you're cautious, maybe you'd wait for an end-of-day close back above the the 50-day moving average at 2p before assuming the upside, and 2.8p plus is on its way. The next stock is Destiny Pharma, and here it looks as though we have a situation where the shares will easily achieve that 70p target that we've had at the top of that rising trend channel from back in February. That leaves us looking for a potential new target, which might cheer up the fans of the shares, which I think will be along the lines of the line I'm drawing at the moment, up to £1, maybe by the end of next month, i.e. by the end of December, if we can get a decent, quick clearance of 70p in the next week or so. Only back below the 50-day line, currently at 52p, really delaying the potential upside scenario. A real mover of late has been Ethernity Networks, and here we've hit that resistance line target there, which was at 4.25p. In fact, we slightly overshot it, which is always nice. The next level up will be the next line I draw, which is derived from the April resistance area, so that could be up to as high as 8p by the end of the year, especially while we remain above the recent gap floor there at 3.3p. So want to see the shares hold above that. Been a great technical charting situation. On to Gfinity, which is improving as well at the moment. Here we can see that obviously it's been a rather bad journey to date, but the view now is that we could break recent resistance around the 0.11 level and retest the September resistance zone by the end of this month. Really want to see no new lows, obviously, below 0.07, but just the first signs there of a turnaround, given that the 50-day line looks like it could be broken today or by the end of the week. Moving along to Heiq, and here one of the stranger charts, bear trap rebound from below the old April support there at 15p. Above that, we're looking for up to 27p at that January resistance line projection, but obviously not much to go on there in terms of the charting. Rather more to go on with Kromek, which has hit one of the targets we were looking for, which was around just near 6p. Above 6p on an end-of-day close basis, looking for a fresh move up to 7.6p over the next couple of weeks. The turnaround backed by the bear trap gap reversal, and then another gap that we had to start this week. So very impressive there. Also impressive has been NFT, especially given that it's on the Aquis market. Here we've got a rising trend channel, which has been in place since February, and no doubt the positive influence of a soaring Bitcoin price will help the situation here. Above the rising 50-day line around 1.55p, we're looking for 2.4p as soon as the end of this month. That little U-shaped or V-shaped bull flag breakout should be the catalyst for a decent move very soon. Moving along to Novacyt, which hasn't appeared here for a while. Here we've had an unfull gap to the upside off the low. It's a bear trap island reversal because there were gaps down and then the gap up earlier in the week. That suggests that above the broken September resistance line at 48p, we're looking for the shares to head as high as 90p by way of the 50-day line at 61. So initial target there 61, and then hopefully up to as high as 90p by the end of the year at the top of that broadening triangle from back in February. Just a couple of stocks to go now. First one is Oracle Power, which has certainly been in the wars over the recent past. Just the first sign of a recovery here. The RSI coming off the lows, and also a resistance line there to break around 0.03p. Above that, we're looking for 0.05 over the next few weeks, but only if we get that break there on the chart. Finishing off with sovereign metals, which has been banging the drum about the beneficial effects of the China graphite move. Here we've got rising 50 and 200-day moving averages now, so that suggests that while we're above the recent support there at 23.5 pence, we should easily head up to the 30 pence area, which is 1 year resistance for the shares. In fact, I think it's probably not too early now to be looking for a better target at that resistance line I've drawn there up to 34 pence by the end of the year, just given the way that both the 50 and 200-day lines are now rising, which means we're a few weeks away, or maybe a couple of weeks away from a golden cross. That's it from me today. More updates tomorrow.